This is Rod Kusin Spooman for Risk on March 7th, 2019, all times on the Charter Central Standard Time. Recently, we drew attention to the market profile that showed a significant low volume area below 66 here, down into 63. And this morning we dove right through it. And we're coming on what looks like a probable pivot. Now we are also at rollover. We have our new March, the March contract is now expired. We're into the June contract. And the premium, when we go into rollover, will jump up significantly. It doesn't always go up. Sometimes it goes down. But in any case, here's where the premium is now. Okay, so now we have to read the premium, the raw data, very carefully, because the averages are obviously going to be affected dramatically because of such a major move. So we made a quick adjustment on the premium to our current settings right on here, 2040 and 250. 20 and 40 I'm not concerned with. We're seeing some divergence emerging here, here, and here. We're slowly moving up, but we're still moving down. So let's see where this is liable to pivot. The low value area on this profile is 2749, so that's a potential target. And this market profile is from the low of February of this year. And so it looks like we're still short into the 2749, and we should be preparing for a long trade in here. Still getting new lows on the premium. So the low is associated with this nice new low on the premium. So wherever this climbs to, we ought to look at short of that if we're not already short. We have a low volume node right in here, and so likely right in here is where we're going to get that short. We're already moving down from that level. We took a short right in there. In any event, the target is down here at or below 50.25. Okay, so now we got to watch carefully to see if we're going to push up even higher. Premium turned again, and we're even more divergent than we were before. Now when I'm getting ready to pull a trade, I carefully look at these numbers and the color. I've set it up so that cyan has a uptrend, yellow and red has a downtrend, green is also an uptrend, not showing at the moment. So right now the fast moving averages are somewhat mixed. Slow moving average is of course short. So when these two moving averages are both turning in the same direction, all things being equal, that's the time to execute a short. Now we've also seen a shift in the profile lines just in the last couple of minutes. This is what we typically will see when the market is getting poised to go long. We still have to get down here to the low, but we may be in a better posture now to look at a long trade based on what the profile tells us. All right, now the slower moving average is beginning to move up. We don't like that. Now it should turn. But what that generally implies is that the premium will move up. Then it will move down again. That will be your cycle. Let's expand this out a little bit more. Okay, we've moved to a low. We've moved to a lower low. Now we move up. And then when we move down again and up again, if we are divergent, then we look at a long trade. Okay, we're really tanking now. Really tanking. Now we're going to go ahead and take profits here. So we're not there quite yet. But we took profits right in here. We're out of the trade. We dipped nicely below the 27.49 area. We went all the way to 43 and a quarter. Wait a second. TradeStation has not updated their composite contract. The ES has not been recalculated. I was almost certain that I saw that it was recalculated last night, but it hasn't been. Okay. Well, be that as it may, an ABC extension down brings from this high to this low to this high, brings us to 100% at 48. Now, yeah, why have they done this? That's not good. So there's about a 5-point spread between the ES composite and the current contract, and of course the difference being the premium. Let's look here. So your premium here is about 5.5 right now, roughly. Okay. Slow moving average 5.3. And you see the divergence here versus here with the upslope. This could be a good place to get in. All right. There were manual trades, and of course we got out here. So that was a nice move on 7 contracts. It's good money. Should you short this? Yeah, there's something in here. The divergence on the ES itself, as well as the premium, would imply that this will come down for a tradable short. Whether it's going to go all the way down to the bottom, that's another story. But that's a tradable short. And here again, now watch Watch these numbers. We might have been a little premature there. 50-50 looks like a good number as well. But watch these numbers. I'm thinking this is a little higher at 50, 25, 50, 50, 50, 75. Of course, if it gets much higher than that, then we're going to be pushing toward the 52 line. But continue to watch these numbers. It may not make it. Okay, this is where it gets really tricky. Now we put some limit orders in there, but 52 is so close. This is likely going to turn and push itself up into 52, or the descending upper value area. So getting in on a short right now is really risky. In fact, I don't like it. I'm going to go ahead and dump that trade. I don't like it. It frustrates me if this winds up working. But it's the premium has been going down so much. The tendency is for it to want to turn. You can see that a little bit more evidently using these set of indicators. So I dumped all these trades in here. I said, nope, I'm not good. I'm not good with that. I mean, we made a little money on it, but I'm not good with that. We're losing momentum. But you see how we're turning on the premium here at the low. And we're coming right back up. Now we're at 51. That's what I don't like. See, there's the turn. That, oh, now, help, get in. Talking instead of trading. There you go. Now we're late. I really expect this to come down to 47 before it considers turning. And I say that because it needs, well, this is, I don't like this. All right, let's correct this particular profile. Why they have not adjusted their contract, I do not know. Oh my goodness. All right, so we're right in there right now. This is where we were saying this thing ought to move down to. And taking profits right in here just for a nice scalp, that makes good sense. But let's look at the premium, and the premium has moved lower. But as this is about to turn up again, I think I'm just gonna say thank you. Oh, don't do it. Come to Papa. Okay, good. All right, so we shorted that. Pulled some trades here, got out, got in again, got out here. It's a little easier to see. Right, now we're going to show you how we adjust the strategy to trade in the direction that we want it to. Now, up until now, we've been short, and now if we're looking for long trades, we have to set the strategy. Two settings of the strategy have to be potentially adjusted in order for us to take long trades. So if you've got our system, here's how we do that. Now, in no particular order, if we're going to trade long, in this particular workspace, okay, this is the Tick 1000, we have a series of CCX indicators that show both the slope and the value of the indicator at the time. Now, if we want to trade according to the slope, then the slope, and if we're trading long, of course, if we're going to trade long, then the slope has to be up. And we have to choose an indicator that's not going to have a lot of volatility in it. So a very fast indicator may not be the best choice here. A slower moving indicator that's already moving up might be a better choice. So if I happen to select this one, because at the moment the slope is positive, the color is cyan, that tells us it's a positive slope, then I'm going to look at the reading on this, which is 30 and 50. 30 and 50. And I'm going to go into the broadcast indicator, come down to the calculate CCX, and change these numbers if I need to. This I don't need to, this I do. Now it's set to 30 and 50. And the number 1345.71 should now be reflected in the verify indicators column, 1345.71. So that's the first of two steps. Again, in this case, we're looking for long trades. The next step is to come over here. And we have two sets of moving averages. We're using the moving averages, the very slow moving averages, just for the sake of the trend. So it doesn't matter that TradeStation has yet to recalculate the ES. And by the way, that's what that C means up here. A data correction is pending. Now, when that corrects, that's going to throw this off a bit, but nevertheless, we've got two data feeds on here. We've got the ES and we've got the SPXU data feed. The SPXU moves inverse to the ES. So using the settings that we've set up here, we've got 4 different moving averages that we can look at on the ES, and subgraph 4 here is on the ES. This should really be changed. In fact, let me do that. I had these sitting on the data feed themselves. I moved them just so you could see the numbers a little bit more clearly. All right, so if I'm going to be trading long, and if I want to use the moving averages that are sitting on the ES, the only one that's moving up right now is here. And that's the fastest of our moving averages. There's volatility in this. And I generally don't like to use it. But if you wanted to use it, okay, you would then set the broadcast indicator to agree with the fastest of the moving averages. Oops. So you'd move down here to MA1, which is currently set to true, which was trading short, and we change that to 100. Why do we change it to 100? Because these are the 4 moving averages. Fastest is at 100. But you can get whipsawed with this. So you got to be careful if you're going to use that. But there's another way we could approach this. Instead of using a fairly sensitive moving average on the ES, we could use a more stable moving average on the SPX, which presently is long, with the exception of the fastest moving average. And it kind of looks like we're about to come down again. But anyway, another approach to take would be to use this moving average on the SPX. Okay. Same settings. Okay. So I could set this to 5,000. And what I would do, if it isn't already set, I'll go to the major trend B, which stands for the other data feed, the SPX. We'll go over here, make sure this is set correctly. And now we're going to use the SPX for the trend, but everything else is going to use the ES. You follow that? Major trend here is short on the ES, major trend on the SPX is long. So if I really want to trade long, if I think this is going to take a dip and I want to get into that long trade, I'm going to use the major trend B instead of the major trend broadcast indicator. Okay, now just to show you on the strategy what we do, we have one set of strategies, okay, which are based upon the trend of the ES. This particular chart is based on using the trend of the ES. And you notice how it shorted that move up. But now if we want to use a strategy that's using the trend of the SPX, we've set up a separate set over here. Oops, I'm in the wrong workspace. Pardon me. Okay, now we're in the right workspace. And the strategies we just pick one of them. Use major trend B. So all of these strategies are using major trend B, which is the SPX. So I just have to determine which one do I want to use. That's how you do it. Now we've missed some opportunities to get into these trades. But you can see the divergence. Now we got out here on the short as this was just beginning to turn. Then we went a little bit lower and the trend was definitely up. The premium was divergent, so getting in anywhere in here for a long trade really made sense. And now we're heading up to 53 and change, and that would have been a really nice long trade. Now we did not get, in all fairness, we didn't get any signals at that time. But that's why you've got to learn how to read the premium. That's the whole point. All right. And there it is, clear as a bell. Divergence. We didn't even make it all the way down to that low value area, which I was a little bit surprised at. But all the same, there it was. Now, what are we doing now? I'd say we ought to just be waiting for a pullback unless something really gets obvious for a short trade. Because when we came down to this low, it's important to know whether there's strong evidence that that was your support level, if you want to call it that. I don't like support and resistance. It doesn't make any sense. There's no such thing. It's all resistance. It's either resistance to going down or it's resistance to going up, in my estimation. Of the major composite profiles, we're not really in any kind of a vicinity for a long trade. There's a small area of low volume in here, increasing volume in here, but that's not real obvious. But on this profile that was from the low of February, we came down to the low value area, breached that briefly, and then started to make our way back up. So, this could come back down, retest that number, etc. We'll just have to see. But if you look very carefully at where the market stopped on its way down, okay, let's just blow that up real nicely. You see how the volume profile shows little activity or comparatively less activity below that low. That's exactly where it went to. Okay. Now, in all fairness, we generated some volume, so that number was actually just below this level here. Right, so we went just a little bit below that, and then we pivoted. So now it may come down and test this number, which we know is not reflective of the current contract. But in any case, I think being long at this point makes sense because we had such a significant drop in that 30-minute bar. We will typically get retracements into it. So, yeah, I'm thinking yeah, we've been long since the low, and we will continue to look for long trades. unless something really changes in the premium. One other little thing, if you're one of our clients and you're trading with our system, the threshold indicator needs to be refreshed periodically, especially if you're using a 5-second chart, because the threshold indicator bases its numbers off of the premium bar that corresponds with the ES. And when bars are missing or there's no difference between the high and the low, the bar count can get screwed up. And so you'll get lines here that aren't, you're going to get levels on the premium that are not accurate. And so a very quick way to fix that is you set up a macro, a one-key macro that will bring up all of your indicators and allow you to turn them on or off. In other words, it's the same as enable, disable analysis techniques. You can set up a macro to bring up that. So I use a one-key macro. I come and I toggle it off. I toggle it back on, and it refreshes. So it takes, what, 2 seconds to do that. And then you've got the correct numbers. Oh, and incidentally, seeing this low here, that low corresponding to this meant the move up. You ought to look for a short. There's your divergence, and down you come. So nice scalp right in there. Very easy trade. So I'm kind of looking for this to come all the way down to the the ascending lower value area. That could be a good long trade. Okay, you look here versus here versus here. Okay, you've got clear divergence in here. So that could have been an opportunity to get in long, but that line here is close, and oftentimes it'll come down all the way before it really makes a more significant turn. So there's a scalp there, but it's just not real obvious that it's going to continue moving up. But you could have gotten in there. And the automated strategy did take a long trade right in here. Okay, so there it is. And it's working. We're having some technical difficulties with our internet for the moment, so we had to reboot a router, and we're going to have to refresh these charts in just a moment. Now, once again, from the standpoint of reading the premium, look at the move up here. Here means you got to go higher. You do. When you go higher and it turns, you're at a lower high. This is coming down. All right, nice scalp into this low, but this is a lower low. So you've got to be at or below this price with a higher low on the premium. That comes in right in here or right in here, and up we go again. Now, we didn't get any long trades at that particular time, but nevertheless, that's how you're going to read the premium. Also, as you look at the raw numbers, you can see that these numbers are misplaced due to the aberrations in the difference between the bar count. So once again, we hit the F5 key, toggle this threshold indicator, and now the numbers are correct. Now let's take a look at what the premium did on this move up. This is a new high on the premium for the day. Here's your pivot. an obvious divergence there. But as large of a move as this is on the premium, the tendency would be to wait until we tag that price and see if we're divergent before we enter the short trade. Now we got an automated long signal up here. Pardon me, an automated short signal up here. But the price of the ES 56.75 current contract, I think that's right. Yeah. So what you want to do is wait till you get right about back there to 56.75 or better. And right over here, we hit 57, and now look at where the premium is. That actually is a better entry because your slope is already down on the premium. You tag it one more time over here, and you're even more divergent at that point. So whether you enter it here or you enter it here is really makes no difference. And then you write that down for a scalp, because that really makes sense. This was where the automated system popped in with the short trade. So now, where might you expect to take profits? Right in where we are right now might work, but below that you've got this low volume area at 52.25. So it's liable to be moving down there. And then as it moves even further, should it do so, you've got more historical volume at those prices, and consequently, if the premium is divergent there, you might as well take profits. You might even want to go long there. So as we dropped into that level, if you look at what happened to the premium right there, and you look at the averages, you get a good idea as to why this may have been a good place to get into a long trade. 52.25. That was a low volume node right in here, right there. So we had a short in here, several other opportunities, very, very good opportunity right in here. Look at the divergence here on the divergence hunter indicator. It's a nice indicator that shows divergence. So you move down, you don't quite make it to the point of control, and you see what's happened to the premium. Lower, 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 then we start moving higher. Here's our low, we test that, we go a little bit lower, there's our higher low, zoom, up we go. Again, a scalp because that begins to fizzle. We get a new high here, relatively speaking, from the standpoint of the pivot. And now we've been drifting lower. So we may be moving up there, or it could be turning and moving down. Right now, it's hard to say. Right now, it's a bit hard to say. So if we were long in here and we did not get a signal, but you can see it's pretty obvious there, you'd be watching this very carefully because you'd be getting in on a fill at around 51, 51 and a half, and you're right back down there now. So unless this turns up again, you're going to get stopped out. Now let's take a look at this. Here to here, move up in the premium. That price has now been tagged here. And where do we see the premium? We're just slightly divergent at the top there. Now, could you go and take profits? Of course you could. But there's reason to anticipate that this is going to move up higher. And that's, again, I'm looking at the profile. This is where we're at right now. And you see, we really don't get into an upper value area, until we're almost past the VWAP. So I would anticipate that we will move up there. So holding a long trade makes sense to me. The initial balance, on the other hand, is not working so well. And now we seem to be taking a blistering move down. And you saw that beginning to lose strength here. But wow, if you were long, you got stopped out and quickly. Because we moved all the way down to the point of control. So let's see here. Moving up as quickly as we move down. And a new high on the premium afterwards. Let's take a look at the automated strategy, see if we got long in here. Unfortunately, no long signals at the bottom of that move. And it would be a bit tricky to want to go long after that kind of a move. But there's the premium, and you can see it when we came down and we hit the low, we're starting to slope up already. Well, all that having been said, it looks like that pretty well wiped out the opportunity for us to get into a long trade. We were expecting the market to continue to move up, which it of course has done. But this drop stopped out all of our positions, and unfortunately, I was a bit too concerned to get back in. So we're going to wrap up the video for today. All of the activities thus far have proven to be successful, except this last one, which was a head fake. And it happens. That's why you need to have a stop. All things. So, with that thought in mind, we look forward to another video perhaps tomorrow. And these videos are instructional, particularly for the benefit of our clients, as we do our part to effectively read the best indicator for trading the Spoos, the premium. I'm Rod Kusin, Spooman for Risk.